Colombia finds itself at a critical juncture in 2025, facing an economic crisis marked by soaring unemployment and interest rates. The nation is grappling with the consequences of these interconnected challenges, which threaten to undermine its economic stability and social fabric. From struggling businesses to anxious consumers, the impact of this crisis is felt across all levels of Colombian society. The unemployment rate has reached a staggering 10.6%, leaving millions of Colombians without a steady source of income. This situation is particularly dire for young people and those with limited education, who face significant barriers to entering the workforce. Adding to the nation's economic woes are high interest rates, which have been steadily rising in an attempt to curb inflation. The benchmark interest rate now stands at 13%, making it increasingly expensive for businesses and consumers to borrow money. This situation has created a vicious cycle, stifling investment, consumption, and ultimately, economic growth. The economic hardship is palpable, affecting the daily lives of ordinary Colombians in profound ways. The Colombian government faces the daunting task of navigating this complex economic landscape. The unemployment rate in Colombia has reached alarming levels, painting a stark picture of the economic hardship faced by millions. At 10.6%, it represents a significant increase from previous years. This situation is particularly concerning given its disproportionate impact on vulnerable segments of the population. Young people eager to embark on their careers find themselves facing a bleak job market. The unemployment rate among youth is considerably higher than the national average. This lack of opportunity not only hampers their personal growth, but also deprives the nation of their talent and potential. While certain sectors of the Colombian economy show glimmers of recovery, the overall pace remains sluggish and uneven. Key industries such as manufacturing, construction, and services have been slow to rebound. This sluggish growth exacerbates the unemployment crisis, leaving many wondering when they will see improvement. The manufacturing sector, once a driver of economic growth, is struggling to regain its footing. Reduced global demand and increased competition have hampered production and exports. This slowdown has resulted in job losses and factory closures, particularly in industries heavily reliant on international trade. Section 4. The informal economy, a double-edged sword. In the face of widespread unemployment, many Colombians have turned to the informal economy as a means of survival and sustenance. This sector, characterized by a lack of regulation and social protections, has become a lifeline for those struggling to make ends meet. However, it also presents challenges and contributes to a cycle of poverty and inequality. Small-scale entrepreneurs often work long hours for meager earnings, barely making a living. While this sector provides income, it lacks the benefits and protections of the formal sector. Workers in the informal economy are often vulnerable to exploitation and face uncertainty in their daily lives. They lack access to healthcare and social security, which are crucial for stability and well-being. The prevalence of the informal economy has broader implications for Colombian society. It contributes to a loss of tax revenue, making it more challenging for the government to fund essential services. Section 5. High interest rates, a stifling grip on growth. In an effort to combat soaring inflation, the Colombian central bank has implemented a series of interest rate hikes, bringing the benchmark rate to a staggering 13%. While this measure aims to curb rising prices, it has also created a ripple effect of challenges for businesses and consumers alike. For businesses, high interest rates translate into increased borrowing costs, making it more expensive to secure loans for investment or day-to-day operations. As a result, many businesses are forced to delay growth plans or reduce their workforce. Consumers also feel the pinch as loans for cars, homes, and other big-ticket items become more expensive, discouraging borrowing and spending. This reduction in consumer spending further dampens economic activity and creates a drag on growth. Section 6. The housing market slump, a ripple effect. The Colombian housing market, once a beacon of growth, is now experiencing a significant slowdown due to the prevailing economic climate and high interest rates. This slump impacts not just prospective homeowners but also related industries and the broader economy. Rising mortgage rates have made homeownership increasingly unaffordable for many Colombians. Higher interest rates mean larger monthly payments, pricing potential buyers out of the market. This decrease in demand has a ripple effect throughout the construction industry, resulting in fewer housing starts and job losses. The slowdown also impacts related industries such as building materials, furniture, and home appliances. This interconnectedness highlights the vulnerability of the economy to shocks in specific sectors. Section 7. A call for action, Charting a path to recovery. The economic challenges facing Colombia are complex and multifaceted, demanding a comprehensive and coordinated response from all sectors of society. Addressing high unemployment and soaring interest rates requires a multifaceted approach that considers various interconnected factors. Creating an environment conducive to job creation must be a top priority for the government and private sector. This involves fostering a business-friendly environment and attracting foreign investment to stimulate sustainable growth. Investing in education and skills training is crucial for ensuring long-term economic stability. Addressing high interest rates requires a delicate balancing act to avoid negative repercussions on the economy. Policymakers must consider the impact of monetary policy on businesses and consumers alike, ensuring fair outcomes. Exploring alternative measures to curb inflation, such as addressing supply chain bottlenecks, is essential for stability. Increasing competition could help mitigate the negative consequences of high interest rates on the overall economy. Investing in social safety nets and support programs is essential for societal well-being and resilience. This includes expanding access to affordable healthcare, education, and job training programs for all citizens. By providing a safety net, Colombia can foster social stability and create a more equitable society for everyone. The road to economic recovery will be challenging, requiring difficult decisions and a shared commitment to reform and progress. By embracing a forward-looking approach and working together, Colombia can overcome these challenges and emerge stronger than ever before. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.